Eric Muadit, Muadit.com, for the weekend of June 18th and June 19th, 2016. Let's take a look at markets here. We begin by taking a look at how Asia closed, and we can see here that Japan was up about a percentage point. Pretty much, let's say most markets were to the upside as of Friday's session after being down most of the week. Take a look at how European markets are closing here for the week. Nice gain, again being down most of the week, but closing Friday's session with a nice move, about 1% to the upside on Friday. Take a look at the Americas here. We see that the Canadian market is up slightly, and so is the Brazilian market. And the US market, with about half a session to go, is down off the lows of the day, but down about, let's call it 0.5, 0.6 on average. We see that crude oil is up about almost 3%, and gold is down about half a percentage point. So let's take a look at those world market charts. Let's begin by taking a look at Australia, which was down this past week. And this does make sense because we had seen that it had come back to test the previous break line on its monthly RSI here. So that break was consistent with the Australian market coming off the highs. So we were expecting a pullback if it hit this line and was rejected, which is exactly what happened. And so we see also a big down week here in the past week here because it moved its weekly RSI below 50. So all that is consistent with what we were expecting. We take a look at the daily now, and we can also see that the pullback does make sense because we were trying to make higher highs in price while the technicals kept declining, which set the stage for this pullback. Now the question is what next? And I think what you're going to see across this video is my personal suspicion here is that after the pullback, I think the next swing trade worldwide is going to be to the upside and not going to be down. In other words, I'll show you why I'm seeing evidence on the charts here that markets worldwide might be looking to bounce after relatively down week. And I can show you this by taking a look at the Australian market on the daily, figure out where this market came off the lows here for a nice movement since then. And so we figure out where the RSI did start moving, which is somewhere around here. So this movement in the RSI is consistent with price. So we draw a line from here. It should be something like that. You've seen the market bounce on this green line once before for the lows there. And now I think we are coming back. So again, coming back, if it holds that line, which I think is what it's trying to do, then we can expect that around here we might get a reversal to the upside, which is where I'm leaning. Now, of course, if the market comes to this level and after a couple of days of trying to hold that line, if the market fails and turns down, then that's when we are going to know that the support has failed and that we can expect lower prices. But I believe right now we haven't seen that happen. So here I would suspect that the market here in the Australian market wants to bounce, which is something consistent with other markets across the globe. Also, we can see that the 200-day moving average, which was creeping lower, is now coming and showing some stability here. So if prices can bounce back above a stabilizing 200-day moving average, so if something like this, holds here and moves higher, that's also constructive. Keep in mind, we already have an upward sloping 50-day moving average. So the market here is not necessarily as bearish as it might have looked during the past couple of trading sessions this past week. So all in all, if the RSI can hold support, I would expect a bounce based on previous market behavior. If you take a look at the Chinese market, it seems to be sideways here. Hard to read, but we have a wedge on the top side showing resistance, and we got support on the bottom side. So that is eventually going to have to resolve either for a move higher or for a move lower, depending on which way it breaks or which way it eventually decides to go out of this wedge. Even the RSI, one can say the RSI has a wedge forming, and so this market, in my opinion, is sideways until it can resolve this wedge formation. We take a look at the Nikkei, the Japanese market, and here it is consistent with what we had been observing before this drop this past week. The market had come back to test the break of late 2015 and that RSI level was always going to be a challenge, and we had been discussing that this was resistance here and resistance again here, and that we should expect a pullback, which is exactly what we got. Take a look at the monthly, and the monthly here is bearish in the sense that as long as the market is trading below 2016's monthly closing low, and the level to watch there is anything below 16,026.76. that's a break, and this market could very easily see lower prices. So anything that keeps it below that price, this is a failed market in my opinion. Also, we can see that right now the risk is elevated to the downside, because you can see here that the monthly RSI is already moving to 3-year lows, which is not what you want to see if you're a bull. And we see that both MACDs are trading at 3-year lows, suggesting that the risk is elevated to the downside. So the market does need to move above that 16,026. So needs to be back above 16,026.76 if it is to start rebuilding. But even though the weeklies and the monthlies look bearish, I'll show you there's some hope here based on the daily, and it is coming off the lows just like we did for the Australian market. As you can see, the market did make a lower low in February here, while the technicals showed an improvement, and since then the market has been trading higher. And so we can see that that RSI movement, so this RSI movement here corresponds with the stock moving above that level on the RSI and moving off the lows in price. So we draw a simple line just there, and you can see that the market has already bounced on this green line once before for this re-entry, and now coming back to test this. Keep in mind that the market was higher on Friday, as we discussed at the beginning of the video, suggesting that there is evidence here that this line is holding. So again, the daily charts are giving markets reason for a bounce, as evidenced here also by the Japanese market. Take a look at the Indian market, the Nifty, and here we can see that it needs to break out above the recent weekly closing high for momentum to continue to the upside. We've had 2 weeks of rest since recording that weekly closing high of 8,220.80. So the market does need to move above that to encourage bulls to be part of this continued move to the upside. So we need to see a price breakout. Otherwise, I think here there's still a possibility of resistance on the weekly based on the RSI work we've been talking about. This was the break off the highs. So this break brought the market off the highs of 2015. We've been expecting a pullback unless the market can clear that red line. So keep in mind that this red line so happens to be at about 61.8. And so this is where we generally see stocks that are trying to recover fail. So for the market to move higher, it needs to take out the price, needs to take out the price highs, and needs to take out this red line. Otherwise, failure to break out above this price high and failure to break out above the RSI level here might suggest that the next swing trade is actually lower. And I believe those are the things we need to watch for, either for a move higher or for resistance. So a breakout is needed above that 8,220 level. Otherwise, failure to break out, one can still expect this market to pull back. Take a look at the South African market coming off 2-week move lower, which is consistent with what we had been watching for, which is the previous break line on the RSI off the highs. So this break here brought the market off the highs in 2015, and so we had drawn a line from there. This line has been a problem ever since. You can see it was rejection here for the highs before this massive plunge, and over the last couple of weeks coming back and showing resistance during all these highs. So this red line has been a problem and continues to be a problem on the weekly. So the pullback does make sense. But if you take a look at the daily, which is consistent with other markets we've seen in this video, the daily charts do look constructive. As you can see, RSI lows line continues to hold. So the daily chart is not broken, actually might show support, so that's good. And also we see that this line here on the RSI, which brought the market off the highs or off the lows of 2016, off the lows here. So we draw a line from there, and we can see that the market has already bounced on that green line. It bounced during this period here back above the blue line, which is this re-entry, and now right now over the past couple of days we've hit that line and now we are bouncing. So here's another market showing that daily charts are suggesting that many of the markets worldwide look and are set for some type of a bounce. Now of course all this is dependent on whether it holds, because clearly if we break below those two lines, then one can expect lower prices. If you take a look at the French market, huge down week. In fact, the last 3 weeks have been down, consistent with our resistance on the weekly RSI here. Also resistance coming off the break. So this break line, let's call it somewhere there, has been a problem. So we draw a line from there. The market has been unable to move above that red line. So we've been expecting resistance levels here on this market. Keep in mind, struggling to move above the RSI 50 level. Also here, resistance at the 50 level for the highs there. Resistance at the 50 level with uniform activity for the highs there. Another resistance here for the highs there. And so the pullback this last couple of weeks does make sense on the weekly. The biggest risk here is on the monthly. As you can see, now trading below 2016's monthly closing low, and so that does bring an element of elevated risk. As long as the market is trading below the level we've been watching, 4358.55, this market is risky to the downside. Here RSI moving to 3-year lows, so that's a bearish development there. We take a look also at the monthly, and as long as that price is below the previous monthly low, this is a risk. The MACD is also trading at 3-year lows, and the main MACD just now about to move below zero. So here it's a market that could easily see lower prices. Take a look at the German market, and what you see here also is the risk of moving to fresh 2016 monthly lows below the previous monthly closing low of 4995.40. So anything below that and it becomes a scary market to the downside. RSI would need to be at 3-year lows for a major sell signal, and we can also watch the MACDs, which are already bearish, given that the MACDs are already trading at 3-year lows. So here we've already seen major sell signals. Here the MACD could also move below zero, which would bring another layer of selling. So below 95.40, this market could see lower prices. But take a look at the daily, which offers some type of support. Keep in mind the market was high on Friday, so slight move higher, and I think this is good action for those who would like to see the market bounce, because based on the previous lows, so this movement off the lows here, nice lows, since then the market has moved higher. We are coming back to test the entry there, so we draw a simple straight line. As of right now, the daily is showing that this is where the market could find support on the daily. So the daily charts are trying to tell us that around here we should expect the market to recover, since it's coming back to test that green line and is reacting very well to it. Now this is consistent with the FTSE on the daily, and here we can see that after Friday's session we're coming back to test this perfect entry off the lows. This RSI movement brought the market off the highs. We draw a line from there, should be something like that, and we see that the market did close above the green line, so that looks like support. It is uniform action below the green line and back above it, so that might explain why we had a 1% move as of Friday. So the daily charts here does look constructive in my opinion. Yet having said that, let's watch the previous monthly low because anything that keeps this below, actually I believe it is this 2015 monthly closing low, anything that keeps it below that, the risk is to the downside. So here we can see here that any movement below 0.61, 6061.61, this would be a failed market. Watch the RSI level, because if we crack to 3-year lows, and especially if we move the monthly RSI below 38.2 on its RSI level, expect lower prices. And also keep in mind that the MACDs are not behaving well below 0, and also moving to 3-year lows on the main MACD tends to be a major sell signal. So if the daily charts don't hold, this market could see a fast move to the downside. Take a look at the Canadian market, which is right now holding the 50-day moving average, which is a sign of a market that is stabilizing after a recent day-to-day pullback. So that seems to be constructive as long as that holds. More importantly, we are seeing that the RSI is coming back to test the previous entry. And visually you can see that this movement in the RSI brought the market off the lows, and so we draw a line from there, and you'll see that the market has already used that for a bounce before. Here, for a nice re-entry for the lows there, we bounced on this line here for the lows here, and now as of right now we seem to be showing double bottom support right there. So as long as this market is bouncing on that green line, we can see another evidence here of another market that is showing day to day. This market could bounce. Keep in mind that if we break below that green line, then that is when we should truly start looking for markets to point down. Right now, looks like the market is doing its best to hold and maybe even bounce day to day. Now that's the bullish argument. Let's take a look at some bearish argument here, and it's a simple line where the market has been struggling to hold above on the weekly RSI. This level here has been a problem. As you can see, it gave us the highs during this period here, and we've been rejected with uniform activity here and again here. So the weekly chart does need to prove itself by staying above the red line. Also take a look at the monthly, and here we have the monthly chart going back about 13 years. Just want to show you that it is coming back to a level where it could stall. This was the break of the highs here of 14 and off the highs of 2015. So we draw a line off the break line here, and as of right now we see that this has become a rejection point. And if the market cannot move above that red line, and especially if the monthly RSI drops below 50, expect there to be a big sell-off. So here this monthly chart does look bearish month to month, even though day to day we see that the market is doing its best to find some stability and maybe even bounce day to day, but the monthly chart still remains very suspect. Take a look at the Brazilian market. We can see that this move here, which began this nice recovery of the lows, so this nice breakout there, has moved the market higher since then. If we extend the same line on the weekly RSI, we see that right now it is also coming and doing its best to hold the backtest attempt there. So that backtest is holding, and as long as it's holding and also holding above the 50 level on its weekly RSI, one can start expecting this to be an area where the Brazilian market could move higher. So if those two lines bouncing on the 50 RSI and also holding above the previous breakout line, that can be looked upon as being constructive. And of course, if we don't hold and if we break below the 50 and break below the blue line, that is when we can expect a pullback. For now, it looks constructive in my opinion. Take a look at the daily, and one can see that this was the movement of the lows in late January, which brought the market above that level, and we've been higher since. So we draw a line from here, should be something like that. We can see that we've already bounced on that level once before for a successful move higher. So we bounced here and held, and right now it looks, in my opinion, we are also showing a short-term positive divergence where prices have made a slight lower low, but the RSI has shown an improvement and also bouncing on the green line. So take all those together, positive divergence and also holding this line here, we see evidence of another market that is showing day to day that it could bounce. So that's what it looks like in my opinion. Monthly charts worldwide are still bearish, but daily charts are doing their best to show some day-to-day bounce. If the daily charts break down, that's when we can expect a pullback. For example, here we can see a simple line connecting the lows, needs to hold. Otherwise, if we break below that, that's when we can turn bearish on the market day to day. Otherwise, day to day, I think the markets are doing their best to hold and could set up for a slight move higher since markets have pulled back over the last couple of weeks. Be on the lookout for my US market coverage analysis, which should be released around the same time I release this video. So check out my US market analysis to see how US markets are shaping up. Otherwise, enjoy your weekend. Good luck, peace, and blessings. Blessings, 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 blessings.